Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the United States, Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm your host, Tai Wang, and today I'm joined by Sean Farrell, Head of Digital Asset Strategy at Fundstrat Global Advisors. Welcome to the show, and sorry for getting your name wrong right at the
no
beginning.
worries, happens all the time.
Well, what a time to be in crypto. I mean, a massive rally since the election. One of the things I actually just wanted to start with is you read that Trump is going to be very, very crypto friendly, but they don't really go into sort of details about that, other than maybe there'll be a better regulatory framework and not, sort of regulation by enforcement. Can you just give us an idea of, why is he so friendly, or why could he be so friendly?
Yeah, I think first things first, there is a way in which the government can be active in regulation and be, proactively friendly to crypto. But frankly, the administration of the past 4 years has been so negative. I mean, they've really had the boot on the neck of the industry. Just not doing a lot of the negative things that they did is, it presents huge upside for participants in the industry. So, for instance, there is very, reliable evidence that you had the prudential regulators debanking crypto companies. They were going to banks in an unofficial fashion, telling them, "Hey guys, you should, not have more than X percent of deposits from these crypto adjacent customers." And so for the past 4 years, or the past 2 or 3 years really, it's been tough for companies and funds in this industry to get banked, to raise capital, to really operate without the threat of regulation via enforcement. And look, Trump has promised quite a lot. I think there are a lot of ideas going into this administration. And obviously that presents some risk that he does not follow through. I think not just Trump, but every politician promises a lot and often falls short of that promise. So that's something we'll be watching. But I think it's important to orient yourself relative to what we've been subjected to over the past 4 years. And I think a lot of what we're seeing in the market right now is that regulatory risk repricing, right? And I think a lot of portfolios are currently undergoing that adjustment. And these numbers do need to get marked higher because we no longer have this left tail risk of a regulatory apparatus that does not like crypto just arbitrarily.
Wow, that's remarkable. It's interesting. I never read anything about sort of this quiet going to the banks on the side and saying, we don't want you to extend loans to some of these people. That's pretty big, and to not have that could open up, as you say, some substantial avenues of funding for folks who may have needed it. So that's quite remarkable. Sort of disappointing, but not surprising in a way, now that you mention it.
Yeah, and if people want to really dig in, there's a lot of literature out there on it's colloquially termed choke point 2.0. My colleague Nick Carter did a lot of really in-depth research on this, and there are other journalists that have followed suit and really investigated what these regulators have really colluded to stamp out crypto for no apparent reason. And the interesting thing is that crypto was certainly heard in the election. The crypto PAC, I forget the name of the specific PAC, but it was the largest single issue PAC ever created for in America. And so I think a lot of crypto investors, a lot of crypto operators have created a lot of really cool things and come into a lot of wealth, and they're starting to make their voices heard on Capitol Hill, and I think that's going to continue.
Right. So I think I saw the headline, but I'm not sure if it's absolutely confirmed. But the SEC, instead of Gary Gensler, will be someone named Teresa Goody-Guillen, who's supposedly an attorney and much more friendly to knows the space really well and could be a lot more friendly. Is that something that is that a name that the industry would be happy to see?
Yes, I think so. I mean, I haven't dug too deep on her specific background, but I do know she has expertise in crypto. Look, there's no, I don't think there's any way to sugarcoat it. Gary Gensler did not like crypto. He had a vendetta against the industry, and was clearly that came through in a lot of his lawsuits. He was issuing Wells notices to companies that had no business being issued Wells notices. He was suing companies left and right, declaring certain assets securities when they clearly need this new regulatory framework specific to crypto assets that really are that's legislators' job to create. But he was trying to take that out of the legislation, from the legislature's hands, and like I just said, regulate through enforcement. And I think when you remove him from the equation, it's another tremendous example of removing negative. And I think if this new SEC chair that is being nominated presents some upside and embraces crypto, I think that is all the better.
So it sounds like you're potentially two positives. You get rid of the boot on your neck, as you so well eloquently put it, and then hopefully they will come up with some kind of framework, and the industry can say, well, follow this framework, and we can go on and carry our business. I do want to mention that your calls on Bitcoin the last couple of years have been amazing. You hit the nail, you hit it right on the head in 2023, and I think it was 115,000 in Bitcoin for this year, for the end of this year, and it looks like we're going to get there.
Yeah, look, there's a lot of game left, but it does appear that we are a sneeze away from that target again. So I guess lucked out for a second year. Am I right?
Let's go for a three-peat.
Why not?
You and the Kansas City Chiefs. So one thing I wanted to ask you about is MicroStrategy. It came across the wire. They just bought $4.5 billion of Bitcoin this week, which is why I guess we're at all-time highs once again. Do they have a big impact on the market? Are they kind of like structural demand in a way? They keep buying?
Yeah, yes, they are. I think the order books are and have felt their impact over the past few weeks. There's no doubt about that. MicroStrategy is amazing. They have taken this supremely scarce, provably scarce asset that is incorruptible by politicians or private sector market participants, and have chosen to put that on their balance sheet and invest all of put all their chips into that basket. And what is cool about that is, just from like a market dynamics perspective, when they put this asset on their balance sheet and it starts to enter an uptrend, their stock becomes a levered proxy to Bitcoin, and so inevitably you end up with their equity being worth some premium to the net asset value of that Bitcoin on their balance sheet. And if you are the CEO of a company who is trading above the book value of your company, you are your fiduciary responsibility to shareholders is to sell stock, sell cheap convertible debt into the market, if the market will have it, and keep doing that until that premium closes and NAV equals your equity value. And what happens is that as Bitcoin trends up, people speculate on MicroStrategy stock. He sells equity into the market. People scoop up that equity because he enters this speculative flywheel, this reflexive flywheel, where people speculate on Bitcoin, and if you think Bitcoin's going up, and you know that MicroStrategy will have more dry powder to deploy into Bitcoin if Bitcoin goes up, because its stock will be going up, then that premium should continue to rise, right? So you have to, MicroStrategy's share price is kind of a reflection of their ability to continue to execute on the strategy, into perpetuity. Now, of course, everything works in cycles. Of course, there will be a time where the market does not think Bitcoin has a lot of near or medium term juice in it, and we'll probably see that premiums start to converge to NAV, and that'll be a pretty good signal that things are starting to roll over. But for now, there's no reason for Michael Saylor to stop doing what he's doing. In fact, it would be
almost irresponsible
if he did not. Right, exactly.
I've been a trader, a sell-side trader for many, many years, but You know, I don't know if you can opine on this or just give us an idea of how it's done, but how do you go about buying sort of 50,000 Bitcoin? Surely you don't call up 10 banks and says, where are you on 5,000 Bitcoin two-way price? And we know what you're doing, Michael. How do you actually execute trades like that? You surely wouldn't go on Coinbase and start buying. Right?
No, I think I do think back in the day, I don't know what I don't know how Saylor executed his trades, but I wouldn't be surprised if his first purchase was just like a bulk buy on Coinbase, pressing the buy button. But no, I think now there's a lot of infrastructure in crypto, and a lot of very talented traders that he works with. I think he has to deal with perhaps Coinbase, where they enter into a TWAP, and I think normally they do like a 5 to 10 day TWAP into the market on Coinbase, and that is apparent in the charts. So there's this metric we look at called Coinbase Premium. Normally that is a good metric to measure US flows, because what this metric shows is the difference in price between Bitcoin on Coinbase and Bitcoin on Binance, with the other leading global exchange. And when the Bitcoin price on Coinbase is higher than the one on Binance, that means there's more, there's the marginal demand is coming from the US. And normally in uptrends, this is 10 to $50 higher in price, this premium. But when what MicroStrategy in the market, you can see it really spiked during U.S. market hours, and at times it's reached 150, 200, and I just think it's a very interesting tidbit and something you can actually look at in the charts. It's something we often look at.
Just a little further question on that. How much of it is, I guess, volume is U.S. based versus non-U.S. based, roughly? Just trying to get an idea.
Globally?
Globally, yeah. U.S. versus global.
That's a great question. I haven't really looked at the data since we've had ETFs launch and have had MicroStrategy really double the amount of Bitcoin they have on their balance sheet over the past 12 months. I think historically it's actually been like 20/80, okay. U.S. And the globe, because crypto is massive around the world. And but I wouldn't be surprised if I ran the numbers today and looked at global exchanges versus U.S. that we're probably getting closer to 50-50.
It's just good to know, just a rough sense of what
that's a good point. I should probably look into that.
Are there other firms like Actually, before I run on that, is MicroStrategy, I mean, I don't know what their average is. Last time I looked a couple months ago, I think their average Bitcoin was thought to be about 40,000. It must be substantially higher than that now, maybe 60. I don't know, but is there some stage, and I know people did worry about it, that because they're levered, if you got a Bitcoin drop sharp enough, would that force a margin call, and MicroStrategy would be forced to sell some Bitcoin?
Yeah, I mean, look, that was a concern, I think a legitimate concern in the past, but none of their debt is secured by Bitcoin anymore. So all of their Bitcoin are unencumbered, and there's no contractual liquidation obligation in their debt agreements. In addition to that, they also have what part of their plan to issue $42 billion in securities over the next 3 years is $21 billion at the market equity offering, meaning that if there's appetite in the market to accept new shares, they can sell equity into the market, into the secondary market, and raise capital that way. And so in a worst case scenario where their interest expense, which is rather infinitesimal compared to the amount of leverage on their balance sheet, I mean, the notes that they raised today were at 0%. And their conversion price is at a 50% premium to today's spot price. So their cost of capital is just incredible. But in the event that they needed to meet an interest payment in short order, I imagine they could just issue additional equity in the market and pay that.
They managed to raise money at 0%? Who needs the Fed? Just very briefly, how did they manage to do that?
They find willing buyers at at that price. I think if you look at how their convertible notes have performed over the past 12, 24 months for the duration of this bull market cycle, I mean, they've been a kingmaker trade for for any convertible note fund that has invested in them. I mean, they've outperformed most assets. I think they've outperformed Bitcoin actually, because they were trading at such a steep discount to par, at the depths of the bear market. So I think it's just one of the few ways for bond funds to make an asymmetric return. That's my best guess. But there seems to be a very strong appetite for these convertible notes in this market.
Are there any other firms like MicroStrategy who are sort of doing this as, sort of, I wouldn't say a side gig, but I mean, most people, I guess, forgot that MicroStrategy is an enterprise software maker, that makes $100 million a quarter or something,
job, I guess,
and people like, oh, really?
Yeah.
Are there any other firms who are sort of doing this or doing it on a smaller scale?
Yeah, so I mean, one that has started this cycle is called Semler Scientific. They're a med tech company that has adopted a Bitcoin treasury strategy. Their share price has done remarkably well.
Is it Semler? I'm sorry.
Semler, S-E-M-L-E-R.
Okay, Semler, got it.
SMLR is the ticker.
Okay.
But what's an interesting nuance here is a lot of people are like, why doesn't any company, any operating company start doing this? I do think that there is a good reason to put Bitcoin, any company to put Bitcoin on their balance sheet, just as a way to diversify your treasury. It's kind of like putting an inverse dollar on your balance sheet. But if you want to get the reflexivity that MicroStrategy has, you do have to reach a certain percent of your equity value. I'm not sure what that exact percent is, but a certain percent of that your equity value has to come from that Bitcoin on your balance sheet. Otherwise, there's too much cloudiness around what is actually going into that share price. If I'm buying, just say, Coinbase went out and decided to put Bitcoin on their balance sheet. I think it would be good. It would be a wise decision. They have a lot of cash on hand, and I think it would be a good way to. Well, actually, I don't know. They're pretty anchored. They're already beta to crypto, so maybe not the best, the sound decision. But my point here is that if I'm buying a Coinbase stock, I'm probably not orienting my, the fair value of the share price to the Bitcoin on the balance sheet, even if it's 5 to 10% of their equity value. I'm probably orienting my views on the share price, around the operating company. And I think investors want to know what they're buying, and if there's an opco that you need to worry about, and you can't just, blindly, use this as a levered proxy to Bitcoin, it's tough to get that reflexive flywheel. And I do think Semler Scientific is getting pretty close to that level right now. In fact, I would think they're pretty much there. There's another company out of Japan called Metaplanet that is doing the same thing. I mean, it's a pretty incredible chart if you look at it. They bought a bunch of Bitcoin, and I think being in a market such as Japan, where if you look at currencies that haven't fared well over the last decade, yen is at the top of mind, and there are some people that argue that trajectory is going to change. But if it doesn't, Bitcoin in yen terms is going to be a remarkable trade. So, yeah, that's another one. There are a few others that are starting to pop up.
Fascinating. We'll definitely look at Semler. Well, I think we could talk for hours about this, but unfortunately we don't have hours, and I do want to get to a couple of the other coins. Can I get graphic one, if you don't mind? I just put up a chart, so a chart, and just for the viewers, and the numbers, because they're moving so much, may not be up to date. It's purely percentage. I saw Bitcoin up 146% this year. Ethereum only up 53%, whereas Solana has really sharply gone up 311%. So could you just give us a little bit of thought on, these are sort of the three largest coins. Bitcoin we just spent a lot of time on, but what's behind Solana's move, and Ethereum's underperformance?
Yeah, so I guess I'll start with the good. I'll start talking about Solana. They've kind of been we've been overweight Solana for the past 18 months or so, maybe 24 at this point. And I think that is oriented around, the bull thesis there was kind of oriented around their focus on developer and user adoption and application readiness. So, I mean, they structurally are a very different platform than Ethereum. Ethereum is trying to build out, in a modular type fashion. That's a terminology used in the industry, where you have the L1, that is where all applications settle down to, and then you have L2s where applications build on to scale. There's a bit of a trade-off at the L2 between decentralization and throughput, and that results in a lot of fragmentation between users and liquidity. And if you're a developer coming into the space, you have to make a lot of decisions when you're developing on Ethereum. What L2 do I use? What interop applications do I use? Where is my liquidity, my users coming from? Are they going to stay, or are they just going to migrate? There's just a lot more decisions that go into it. Solana is an integrated platform, so they don't have, there's some nuance around this, but overall they're just one L1 that tries to scale that L1 to the limit that hardware will allow for. And the way they do this is via a mechanism called parallelization, which is a different way of processing transactions. So instead of, in Ethereum, there's sequential transaction processing. On Ethereum, they can do a bunch at the same time, more or less. And so I think first things first, that is structurally a very sound framework for bringing new users in, because the UX is better. And we are in a period where there's a lot of new capital being introduced, a lot of new applications, users coming in. And over the past 12 months, where they've gone is Solana, because that is where the better applications are. They're more usable, they're more, there's just a better experience for everyone involved. And so we've seen this incredible, renaissance for Solana. And obviously there's kind of this thematic rise and this story of its fall because of its association with some unsavory characters in the last cycle, and its rise that I think is it really speaks to how they've really gotten callous, and they've really they were broken, but they healed back a lot stronger. And that kind of resilience comes through in a lot of the developers, a lot of the users that I meet at Solana. And look, I think the on-chain metrics and the flows into Solana speak for themselves. And it's currently the number two, the beta to Bitcoin in this market.
And so Ethereum has sort of drastic, I wouldn't say drastic, but very significantly underperformed. What's your outlook on, can they fix their issue, or and make themselves as sort of, they used to be, I guess, the number two to Bitcoin, not too long ago, or are they destined? And I'm just struggling for a metaphor in the markets. Are they going to be like a BlackBerry, or they have to change something?
What's
your outlook
of crypto?
Yeah.
Look, there's always that risk, right? It's still a young industry, and no one's safe, Ethereum included. I would say Bitcoin's probably safe, but outside of that, no one's safe. And look, Ethereum's struggle, it emanates from the structural differences that I just talked about. I think it's had this weird middle child problem where it's not as good of a high throughput blockchain as Solana or Sui or Aptos, but it's also not as good of a sound money like Bitcoin, and so it's been in this weird middle ground. In addition to that, it's also a lot bigger, right? And it's been adopted in these institutional products. It's on the CME. It has ETFs. And so all those things considered, I think from a market structure perspective, the marginal buyer is now TradFi, right? And TradFi for just traditional financial institutions, right, for some crypto lingo. I don't know how up to speed your audience is. But so the marginal buyer right now is TradFi, and until that capital comes in, until we start to see to TradFi, Ethereum is kind of low, unprofitable tech, right? Mm-hmm. They look at it more like technology. Bitcoin is sound money; it's a macro asset. They'll get involved with ETH, but not until we start to see low quality names in equity markets start to outperform. Till we see TradFi capital start to move out in the risk curve, small caps start outperforming. And I think that bid will eventually come, and capital will move to ETH, and ETH will outperform. But right now, it's, from a crypto native perspective, the asymmetric returns aren't there for crypto native funds. It also has a bad messaging problem, but I do think once that TradFi bid comes, it'll have its day in the sun.
Mess 2, did you say? A bad mess 2? You just
bad messaging.
Oh, bad messaging.
Yeah, sorry.
Got it. And to what I'm switching gears just a little bit. Do you see, another a sector that's seen tremendous growth? Obviously, is AI. We're all waiting for Nvidia's earnings today. What kind of overlap do you see between AI and crypto?
So there are potentially a lot. I think there has been a lot of effort within the crypto industry to build out things like decentralized models that are trained in a distributed fashion. I think there are a lot of concerns right now over models becoming, AI is inherently a centralizing force, very similar to Web 2.0, but to an extreme. And I think a lot of people are concerned about, these very powerful models being controlled by one entity, whether that be a company or a government. And so if you can use cryptographic primitives to reliably train these models in a distributed fashion, I think that would be massive. But what's I think the provable intersection at this very moment right now between crypto and AI are with Bitcoin miners. So AI, obviously, it's very energy intensive, requires a lot of hardware, requires a lot of energy. And who is sitting on a lot of hardware and a lot of energy are Bitcoin miners. And I think what's happened over the past couple of years, this whole cycle, is that you've had the mining industry get a lot more crowded. Margins have decreased. Obviously, we're going to have another halving in 4 years, or I guess 3 years at this point, and margins are going to halve again. And so I think these miners are sitting on these power contracts and hardware that can be repurposed for GPUs. And so I think what you're going to see is more miners move into providing services not for Bitcoin mining, but for, and we've already seen this in companies like TeraWulf, Core Scientific. Some others have dipped their toe into AI HPC services, and their share price shows it. But I think we're going to see more of this over the next decade, and you're going to have this interesting synergy between Bitcoin mining, which monetizes energy, and AI, which uses a lot of the same infrastructure pieces as Bitcoin mining.
Fascinating. Never quite thought of it that way. So we don't have a lot of time left. A couple of things I do want to get to. What's your outlook for 2025? Like I said, you nailed Bitcoin, 2 years in a row. What are you thinking Bitcoin, and as well as Solana and Ethereum for their targets for 2025? I don't know if you finished developing that yet, but what are you thinking
that's still a work in progress. But I have to speak, high level. I think, look, we approach the market through a macro first lens, and build pair bottoms up analyses with that macro first lens, and I think that gives us some edge in the market. And when I look to next year, I think you have a new regime that is friendly to crypto from a regulatory perspective. I don't think that has worked through everyone's portfolio just yet. That same regime is going to be pro fiscal deficits. I think I'm not sure we're going to see any kind of fiscal conservatism enter the picture anytime soon, which is obviously stimulative for asset prices, especially liquidity-sensitive asset prices. Inflation is coming down, but it's still above Fed target, but the Fed is dovish. And all those factors coming together, it presents a pretty compelling setup for into next year. And happy to be back on when I do have my.
Would absolutely love to have you on. Last question before you have to go. What's the black swan event? What out there that we see could cause everything to turn around? Because one thing that I've seen is Bitcoin sort of more of an risky asset in some ways than a safe haven asset in terms of when if there's a big drawdown in the stock market for any reason, Bitcoin seems to follow. So what's a black swan event that you'd be really worried about, briefly?
Yeah, well, I mean, look, by definition, black swan event. I'm not sure I'm able to predict that, but I guess a big concern right now are geopolitical conflicts. I think if something either between Russia or Ukraine, or something in the between China and Taiwan, or something like that were to blow up, that would certainly be a black swan type event where we'd see cross-asset correlations go to 1, and Bitcoin is not immune to going down that environment.
Hopefully we don't see that. And thank you so much for being with us today. I can't wait till we get you back on again. That will do it today for Global Money Talk, live from the New York Stock Exchange. We're so excited to bring you daily coverage here on SamPro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thanks so much for joining us. We'll be back here tomorrow. Have a great day.